Okay, you've heard it called an affordability crisis by the media, by politicians, even by the real estate industry that I'm part of, because nobody wants to call it what it really is. Housing inflation. Inflation is a negative word that makes people ask, why something isn't being done to tame that inflation. Whereas affordability is more vague, more sympathetic to buyers, and in general is less accountable. Now, politicians love less accountable a lot. But folks, affordability, schmortability, it's housing inflation. Now, inflation has always been too many dollars chasing too few goods. In this case, the dollars are mortgages and the goods are homes. Now, throughout history, there have proven to be only three ways to solve an inflation problem. You reduce the number of dollars, the demand, you increase the number of goods, the supply, or both. Now, the myth I talked about is the myth of supply. For years now, we've been told that the cure for our housing inflation, affordability, is to increase the supply of homes. Build, build, build. In garden suites, in laneways, four-story apartment buildings in neighborhoods, etc. There's only one problem. Homes are not blue jeans. You can't just churn out truckloads of new product. It takes years of land assembly, red tape, environmental assessments, neighborhood consultation, greenbelt workarounds, financing, planet, you name it, to build significantly more supply. Now, don't get me wrong, we do have a supply problem in both absolute and relative terms, and we need to build. But just pounding the supply drum is not solving the issue because demand is just so much bigger. The galloping housing inflation that you're seeing now, reaching a fever pitch really way above the 20-year trend line in the recent months, is only going to calm down in the near term if demand moderates. And that means mortgages are going to have to become harder to qualify for, and that means raising interest rates. Now, the ultra loose money we've unleashed on housing thanks to record low pandemic interest rates probably saved the economy, but it has led to an explosion of buying by investors, big and small, who, along with first-time buyers, desperate to get on the property ladder before ownership becomes out of reach altogether. Those two groups are now the biggest slices of home buyers out there. Now, unlike the much smaller move-up and downsizer buyer, neither investors nor first-timers create any new for-sale inventory, and that adds further to the problem. A related myth I'd also like to debunk is that the housing inflation we're seeing is about a lack of listings or that sellers are somehow holding back. Well, we just had record sales volume last year in the Toronto Real Estate Board. You can't have record sales without record listings. It takes a listing to make a sale. It's just that the record listings last year were more than completely absorbed because, again, demand is just so much greater. So the immediate answer for this insatiable demand is much tighter money from higher interest rates or demanding much higher down payments, but it'll probably be rates and probably higher than before COVID hit. Nothing changes the market like interest rates. Now, this will work, but this comes at a cost. What kind of cost? Well, when I was in high school in 1981, the government had to put interest rates up to an unbelievable 21% to kill general inflation that was running at 18%. It caused a terrible recession and people lost their homes, cars, jobs. It was bad. But it did work to kill inflation. Now, I'm not advocating they do that. I don't want higher rates. I've got a mortgage. You don't want them. Nobody wants them. But the more the genie gets out of the bottle with housing inflation, the less likely a gradual increase in rates will work to cool things, and the more likely some kind of interest rate shock therapy becomes the only card the government can play to stop runaway house prices. Or we're just going to have to accept the fact that only the rich or pension or investment funds or rental corporations are going to be able to buy residential housing in the GTA because they can all pay cash. Everybody else needs mortgages. Now look, I don't make predictions, just observations, current and historical. I'm not telling you rates are going up or down. I'm not telling you that I want rates to go up or down. I'm not telling you lower prices are coming, so hold back. And I'm not telling you go out and buy now at any price because it's only going up. I'm not saying we're bigger than Jesus or better than Jesus. I'm just saying that until housing demand moderates significantly through multiple significant increases in interest rates that I'm not sure are coming, I don't see much change in the upward trajectory of home prices in 2022. Supply ain't gonna do it. Over the longer term, owning your own home and living in it has always been great, and a tax-free way to build generational wealth, as well as a great feeling knowing you literally are master of your domain. So if you're buying within your means and plan to live there for many years, you don't have to worry too much about market direction in the near to medium term. Over a long period, you're going to be fine. I'd love to hear your thoughts on demand versus supply and the housing affordability crisis, inflation, and your recent real estate experiences. And I'd love to and can pull out all the stops for you to help buy in this challenging market. Connect with me today. Be well, and I'll see you next time.